Ladies and gentlemen, good day, and welcome to the Q1 FY23 earnings conference call of Onward Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. At this time, I would like to hand the conference over to Mr. Anuj Sonpal, Chief Executive Officer of Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Onward Technologies Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us, firstly, Mr. Jigar Mehta, Managing Director, and we also have Mr. Devanand Ramdasani, Chief Financial Officer. Without any further delay, I request Mr. Jigar Mehta to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon, everybody. It's a pleasure to welcome you all on the earnings call for the first quarter of financial year 2023. I hope you're all keeping well and safe. I want to take this opportunity to congratulate my entire team for delivering a score. I'm pleased to share that we have recorded robust Q1 performance, driving the highest quarterly revenue of 93.7 crores, with our highest ever year-on-year growth at 35%. We are seeing strong demand for our services in line with our medium-term objectives of achieving $100 million of annual revenue. In parallel, Onward continues to exit the legacy business, which is the low margin, high volume business that we used to do in India, while focusing our entire investments and budget on the top 25 global customers. These customers now, again, I'm pleased to share, generate close to 73% of our consolidated revenue and has increased by 12% from the same period in the previous financial year. I'm also proud to announce today that over half of these customers from our top 25 contribute more than $1 million revenue per year, with visibility towards even higher share of wallet in the coming quarters. What that means, what I'm trying to explain is our vision in terms of $100 million is we will have few customers which will be as high as generating $10 million revenue per year, going towards that journey towards $100 million. We are undertaking business building investments in the two primary areas. One is, as I shared earlier, in the earlier earnings calls and in our notes, post-COVID, we have now 7 international offices, 3 in the US, 1 in Canada, and 1 in London, and 2 in Europe, in Frankfurt and Amsterdam, which were working in a very, very thin team size now, which we are strengthening and building up the entire both sales and the entire delivery engine in these 7 international offices. And the second big investment that we are doing is something that we like to call an Onward Technologies Academy, under the terminology TAP, which is Talent Acceleration Program, where we are investing to build advanced digital capabilities in line with our goal of achieving 50% of our revenues from in 2025. I'm happy to inform you that today Onward we're also happy to share that we've awarded a large multi-year deal from one of the largest global automotive companies in the digital space, which will reflect our results in the coming quarters. Under the TAP initiative, now we have 250 engineers getting trained across the 5 design centers that we have in India, which is Mumbai, Pune, Chennai, Bangalore, and Hyderabad. And this whole training will be approximately for anywhere from 6 to 9 months, and post that where they will start working on the various projects in these top 25 clients. These business building investments of across this total 2 initiatives that we are focusing on is approximately budget about 25 crores per annum, which will propel future growth and an improved business mix while impacting reported EBITDA margins in the short term. Lastly, I'm also happy to announce that we were awarded Engineering Partner of the Year by Intech Awards 2022 in Delhi. Overall, as a summary, we believe Q1 was a great quarter as a follow-up to our last financial year and on our journey to beat the record of the growth record of the previous financial year. Now I hand over the call to our CFO, Mr. Dev, to give you the financial.
Thank you, Jigar, and good afternoon, everyone. Let me take you through the first quarter financial 23 performance of our company on the consolidated basis. The operating income of Q1 FY23 is 93.7 crore, which is, as Jigar has mentioned, that we grew year-on-year basis by 35%, which is one of the highest growth ever. Growth in revenue is mainly driven by increase in wallet share from the existing strategic clients in the industrial and equipment, heavy machinery domain, as well as in transportation and mobility vertical. The EBITDA reported was 2.9 CR, and the net profit after tax reported is 1.2 CR. In the landmark decision, one of the landmark decisions, income tax authorities awarded a refund of 51.7 million INR to the company, which is recorded in during the quarter, which is case belongs to the financial year 2007-8, and in company has received the amount along with the interest. Our reported EBITDA and PAT of Q1 was lower due to the heavy investment in the manpower and the capabilities, as Jigar mentioned in above. The key initiative were hiring, training, and upskilling of the graduate training program, which is called the TAP, from the available talent pool to cater the future demand. Direct cost belongs to the TAP program, which is 2.474 CR, which is recorded in the quarter one. The company has added net addition of 197 employees during the quarter on that, and which is majorities are billable resources. Taking to the total headcount is 2838. We are also setting up the infrastructure for the new digital center of excellence in Navi Mumbai, which will be operation in Q2 of FY23. With this, we can now open for the floor for the questions and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parthiv from NVS Brokerage. Please go ahead.
Hello, sir. Congratulations on the best ever top line. That's a great achievement, I would say, of 94 odd crores against 69-70 crores year on year. So my first major, like the primary question is on the employee cost. As you also said that, your employee expense has actually, shooted in the quarter. And I believe you received some US, some benefits from the US actually at the time of COVID, if I'm not mistaken. So will this be the new normal for as far as the employee cost is concerned, especially when we start comparing as a percentage of the top line? That is my first question. The second is, sir, can you just give a brief, breakup on the revenue coming from different geographies and across the client, segments? That would be really helpful to me, sir.
Sure. Thanks, Parthiv. To answer your first question regarding employee expense, yes, that's correct. This will be the new normal in terms of the fully loaded cost of our entire team today, which is sales team, delivery team, and of course the new sort of academy or the TAP initiatives where we are onboarding a large number of freshers for training. They are also all on full salary in the company.
Okay.
In terms of your second question, so we are present in 3 industry verticals, right? So the first is industrial equipment and heavy machinery.
Correct.
Second is transportation and mobility, and third is healthcare.
Correct.
So the revenues from industrial equipment is 45% of the consolidated revenue.
Correct.
The transportation is 38%, and healthcare is now at approximately 6%.
Okay.
Right?
Correct.
And you will continuously, so we still have approximately 11% revenue, which comes from the others category, which you will see us slowly, continuously, that number will be coming down.
Correct. Okay. And so just wanted to understand now with, this 93, 94 crores of your top line, will this be growing at the same or accelerated pace for the rest part of the year, for FY23?
So Parthiv, yes, we see a very good visibility and traction from all our top 25 clients and a very active prospect base in terms of the opportunity in front of us. So now it's all about execution and building up the delivery capacity across multiple cities and locations where our clients are based.
Perfect. All right, and the benefits for the employee from the US has been done, right? We are not receiving any benefits from the US part for our employee expenses.
Correct. Yeah.
Okay, perfect. Thank you. It answers all my question. Best of luck, sir, and hope this run rate even accelerates further for the rest part of the year and coming years as well.
Thank you.
Thank you so much, sir. Thank you for answering.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors LLP. Please go ahead.
Hi, Jigar. Congratulations on a good growth, or excellent growth, I should say. Just on the EBITDA margin, do you think this is sort of the bottom in terms of the EBITDA margin, or do you foresee it going down further during this year?
Hi, Rajesh. In terms of, so the way, let me answer it, how we look at the business today, this financial year compared to last year. So what we are seeing, last year was where we set the foundation, where we are coming back to work and rebuilding relationships with all of our clients, post work from home and COVID times. And we see a massive opportunity, which we shared with you guys last time. Now what we are seeing is a much bigger opportunity from our clients as we have built much more level of trust and credibility with them. Now, in these clients, in engineering, as you already know, the order book position is not something which is multi-year like IT services contract. But on the digital side, we are seeing much larger contracts, and we started winning those. And to service them, we are investing proactively in these behind these customer contracts or customer engagements. So from a EBITDA perspective, from operating margin perspective, we continue to maintain the same as last year and get better because we are transitioning more and more from mechanical to digital. But our investments, especially in the 7 international offices, is what it's all about. It's all about timing, and we'll have one quarter up and down. But overall, we see this as a massive opportunity in front of us in terms of to scale up our revenues from our existing clients.
Right. Okay. And then these 250 engineers which are part of your TAP program, what would have been the cost of them in this quarter?
Dave, do you want to answer that?
Yeah. Mr. Rajesh, this quarter, there is a direct cost and indirect cost. So direct cost is 2.4 CR, which has been charged to the P&L of this quarter.
Okay. And these folks will start becoming deployable from, let's say, December quarter onwards. Is that right, Jigar? That's the way to understand this?
Rajesh, we would see this in terms of deployment from a billing perspective. It will start from this quarter for some of the batches that started in November because it's a 9-month cycle. So we are already seeing that traction. Several of them are starting at various client projects already. But they will constantly get refilled with more and more batches as we keep making progress towards building much bigger capacity for our clients.
Okay. I guess what I was trying to understand is, will this increase further, or this kind of load is something we will carry on our P&L, because obviously there is no commensurate revenue against this cost?
So currently, because we're starting off from ground zero, yes, the cost will continue because we want to build up the entire base. Yes.
Okay. But the
It will be like a rotation.
but you're also,
It will be
right.
rotation, it will be
Yeah.
a cycle. Where
Right.
these 250 will start now. 7 of them, let's say almost close to 30%, are now shadowing our live projects from training already got over. Now they will start billing and they will start getting deployed. A very similar cycle that you see in any other from the IT services side and from the other large companies.
Right. No, but because, see, the way, and correct me if I'm wrong, what I see is that by December, this whole batch will be deployed, and they will start generating revenue from the December quarter on a fully ramped up basis. So the next batch, which is coming in, the cost will be there, but then there will be at least the revenue from the previous batch that will be coming in. So in that sense, your EBITDA margin should expand, and that's what I was trying to just make sure I'm thinking about it the right way.
Yes, correct.
Okay, got it. Okay. And the people that you... So, you know, if you separate this 25 crores into your TAP program and the sales teams that you have hired in overseas offices, obviously those are more expensive folks, which is what we can decipher from the number Dave just gave us. So how do we think about that? Is it... I mean, that cost will obviously remain there, but what we should see is continued revenue growth of, let's say, 7% or even higher quarter-on-quarter. Is that what will be the result of that investment that we have made? And what is the guidance therefore for the quarter-on-quarter revenue?
So absolutely. So let me simplify it a bit more. So we have we have 25 large clients today that we are serving, which generate 73% of our revenues, right? And that's a number that we are growing. Now, for 25 clients, let's say we would be 25 account managers, 25 delivery managers, and 25, from all the support functions that go with it. We have that very well covered from an India perspective. And that's what has generated, let's say, making about 13 clients which generate more than $1 million revenue. There are a few who are at 3 million now, and there are a few by the end of the year will cross $5 million. So now what we are doing is for the same customer engagements, we are adding the account managers or the various relationship and engagement managers outside India in the 7 locations. These are some of the largest manufacturing companies in transportation mobility or in automotive, in industrial equipment in the world. So they are present in majority of the locations where Onward Technologies has set up an office overseas. Now we're appointing account managers in each of these locations, which gives us a much bigger visibility in terms of growth and opportunity. So we're putting the foundation and the building blocks towards the future where we can sustain the revenue growth with these clients.
Right.
The impact on margin will be much bigger because the contracts are now more and more, they're not just mechanical, they're also on the embedded side and on the digital side. So which is higher bill rates where the margin expansion will happen much more.
Right. So the question is then, this kind of 7% quarter-on-quarter growth, do you think we can sustain it this year? That's what I was trying to ascertain.
So we are seeing a very good visibility for this, at least for the next few quarters.
Okay. And then, Jigar, anything on the M&A side? Because I know to get to your $100 million target by fiscal 25, there has to be an inorganic piece to that growth. So if you can comment on as to what you're seeing on the M&A side, have the valuations come down? And, are there some things which are closer to getting done, etc.? So if you can just comment on that, please.
So Rajesh, since our last earnings call, our focus on the M&A side has slowed down a bit since travel and global locations has opened up and our opportunity, our funnel has just scaled up much in a very big way. But our eyes are open in terms of we continue to have conversations. We continue to have a lot of inbound inquiries. And we're always open in terms of the right acquisition for us, which will help us scale much faster in these 25 clients or in a similar industry vertical that we are present in today.
Understood. And Dave, one just housekeeping question on the tax side. So after this refund, how much more refund are we expecting on the tax side?
So, Mr. Rajesh, we have about 14 crore yet to be receivable from the department, and is the various years and various authorities. So in total is 14 crore yet to be received.
I would request the participant to join the queue again, as there are many other participants waiting for their turn. The next question is from the line of Mr. Pratap Maliwal from Mount Infra Financial Private Limited. Please go ahead.
Yes. Hi. Can you hear me, please? Hello?
You're
Can you hear
audible.
me?
Please proceed.
Yeah. Can you hear me?
Yes, you're audible. Please proceed.
Yeah. Thank you so much. Thank you for taking my question. As I was seeing that we have a goal to reach about 20 customers with a 1 million plus run rate. And about, I think, a few quarters ago, Q2 of FY22, we were at 11, and now we've scaled that to 13. So now with some of the challenging macros coming in, do we see a slowdown here? Can we actually scale this to 20? And what could be the possible timeline of this scale up to 20 customers?
Yes. Hi, Jigar here. So 11 for us has become 13, and we have a visibility to get to 18 to 20 by end of this financial year.
Okay.
And we continue to see that.
Okay, so we're not seeing any signs of a slowdown or maybe clients delaying certain projects or revenues maybe getting pushed out into further quarters with the coming slowdown in the talk of recession and everything?
We have not seen that so far.
Okay. Thank you, sir. That's helpful. Now, please correct me if I'm wrong, but I believe in our investor presentation, we don't have the exact breakup of the client concentration and the geographic concentration, while we do have a basic idea, but if our exposure and our revenue inflows from North America, Europe, and India, the exact figures, the exact breakup, I believe, is not available. So could you please provide that?
Sure. Dave, can you please answer?
Yeah. So in consolidated basis, revenue contribution by Indian entity is 51% and 49% is contributed from the outside India, where the US is the one of the major contributor, which contributes 36%.
Okay, thank you, sir. That's helpful. Now, when it comes to our hiring trends, we've again hired a good number of employees this quarter. So would the hiring trends continue? Is there any guidance on this? Just trying to get an understanding of how the cost structure could maybe change going forward.
Yes, absolutely. In terms of hiring, we are trying to accelerate the hiring. And please keep in mind, this is net hiring that we are onboarding, so it's net attrition. So we continue to hire a lot of people as we speak across all 14 locations where we have offices today.
Okay, thank you. That's helpful. And just one last question from my side. While you have the number on the 1 million plus clients, are we disclosing the number on the 3 million plus or the 5 million plus clients that we may have right now? 3 million maybe?
Not yet. We will as soon as we have more strength in that direction, yes.
Okay, thank you. I'll get back in the queue. Thank you.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and one now. The next question is from the line of Krish Kothari from Shinobi Capital. Please go ahead. Kothari, I have unmuted your line. Please go ahead with your question.
Hi, can you hear me?
No, Mr. Kothari, you are not audible. I would request you to use your handset.
Hi, can you hear me now?
Yes. Please proceed.
Yeah, sure. Okay, so Jigar, a lot of your growth seems to be coming from your transportation vertical. I was just wondering if you could talk about what exactly is working for you in that vertical, what maybe some specific investments that you've made that are paying off, and any sort of lessons that you've learned from this growth.
Krish, if you look at the numbers for the last quarter and the visibility that we have, so it's across, need to clarify, it's across all the three verticals. On the transportation vertical is where we signed up several OEMs during COVID times, several large OEMs in the last 2 years. And the massive deals that we spoke about that we had won, and we are seeing a huge ramp up across our clients right now. And all of these contracts are predominantly on the digital services side of the business, and some are on the embedded side. The challenge for us has been the capacity, where if we had a capacity of 500 more people, engineers readily trained on various cloud, data science, data analytics skills, we will see much bigger growth as well. And that's what we have been investing in right now. In terms of our industrial clients, this is the legacy business of Onward, where we did a lot of mechanical engineering business, and we see a steady growth in that. Very soon, you will see us hopefully sign up on the digital side of the client contracts as well, and you will see the growth in that vertical as well.
Okay, got it. Could you? I think you sort of discussed this, but in Q1, how many of your engineering employees actually generated revenue? Do you have any specific number on that?
Sure. Dave, can you take that?
So our billable headcounts put together out of 2838 is 2478, and balance is the G&A and non-billable staff, which includes the talent acceleration graduate which are undergoing on training.
Okay, got it. Thanks. And also just on this employee aspect, so obviously there's a lot of sort of new employees coming. When you sign up these employees, are you taking any steps to sort of ensure longer term retention? For instance, do you have non-compete clauses or anything like that?
So for the three types of contracts that we have in the organization. So one, which is employment at will, which is, I believe, cut across all our offices, and that's the culture that we like to follow. For employees, irrespective whether they are freshers or lateral hires, where we are investing substantial time for training, we have or certifications. We have a two-way service agreement with these employees, which is anywhere from 18 months to 3 years. And third is for senior hires. We are now hiring a lot of people from tier 1 companies, from large Indian outsourcing companies who have been there, done that. And with those, we have a non-compete in terms of just not approaching our clients.
Understood. Okay, got it. And just so one question on the legacy business. Do you guys have a complete specific timeline in terms of when you will exit that completely, or is it a sort of moving target and you're just trying to do it as fast as you can?
So exactly opposite, like I shared earlier in the earnings call. We are not trying to exit any contract. What we are doing is the contracts we wanted to exit, we exited close to, I think, 9 months ago, right? So all of them. Now there are other contracts in the legacy business. When they come for a natural end is when we are opting out and we're taking those engineers and putting them in our TAP Academy.
Okay, got it.
But proactively, there's nobody in the company which is selling those services in the market today.
Okay, understood. And so once you, let's say, to the extent possible, sort of exited that legacy business, how many active clients do you anticipate you will have at any, of course, a ballpark number, but will it be dramatically lower than it is right now?
Yes, so that's a great point. So if you see our number of active clients, about I think 2.5 years ago, we were at 200 plus. Now we've come below 100, and continuously we will see the number come down in the next few quarters.
Okay.
I don't. It's not necessarily just because of the legacy business. It's also because of the focus of working with some of the largest OEMs in the world. That doesn't give us the bandwidth to actually go after new. There's so much to be done with these guys itself that our focus and priority is here right now, at least, and it will be for the next few years.
Understood. Got it. Okay, thanks, Shikhar. I'll get back to you.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and one now. The next question is from the line of Sanjay Saw from RIPL. Please go ahead. Sanjay, I have unmuted your line. Please go ahead with your question.
Yeah, hi.
Sir, I would request you to kindly speak on the handset. Please go ahead.
Yeah, all of my questions were answered, so I'm nothing left with.
Thank you. The next question is from the line of, again, Mr. VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, hi, Jigar. One question is regarding the customers where we are getting 1 million plus of revenues. So in how many of such clients have we become strategic partner where we have exposure to all the RFPs coming out of them?
Hi, Rajesh. That number is approximately 25, a bit higher than 25.
Oh, I see. Okay. That's wonderful. So you're saying among top 25, you are a strategic partner in all of them. It's just that in half of them, the revenue has ramped up to 1 million plus.
Yes. So I don't use the word strategic partner. I'm just saying we are a supplier to some of the largest companies in the world, where now we have access to all the RFPs in the areas where Onward Technologies has in-house capabilities. So some could be for digital, some could be for cloud, some could be for embedded electronics, and some could be for product engineering. So it depends on the various, and then once you're inside and you do a good job, then you get an opportunity, as you know, to hopefully get into other areas where the customer is looking for a new supplier. So it's all about mining, and that's where we are hiring the account managers and sales leaders outside India today across our 7 international offices.
Right. No, that makes sense. So the question is, the other question is that the funnel.
I would request you to join the queue again for the follow-up questions, as there are many other participants who are waiting for their turn. Thank you. The next question is from the line of Chirag Pachadia from Ashika Institutional Equities. Please go ahead.
Hello, sir. I joined the call for the first time, and I have basic questions like what are the levers in place to increase our EBITDA margin going forward, and also your thought process on the workforce and attrition control going forward.
Dave, you want to take the first one? I'll take the second question on attrition.
Sure. So hi Chirag, this EBITDA movement is because of the keep investing in the manpower, because we are the service industry, so we have to invest in our people for the future ready demand on that. So as you know that in our beginning of the call, we have initiated that there is a program of the 250 engineers which are the non-billable, and we are training them, upskilling them for the ready for future demand. So that direct cost is associated in this quarter one P&L is 2.4 CR. Therefore, the EBITDA has been down. But once the people will get trained and billable, then the EBITDA will be upside.
Do you started the inflationary rise in the cost to the passing on to the client by increasing the contract rate and all, or are we still continuing with the older rate which we quoted earlier with the clients?
Sorry, I didn't understand the question. Can you please repeat?
What I have seen across this sector in last one quarter that due to increase in the traveling costs and all, companies have started passing on the increased rate of cost to the customer in form of charging the higher rate for the cost which they earlier used to do at an older rate a year back or so. Do we have started negotiating with the clients to attract with them for at a new higher rate or to maintain our margin profile other than employee cost amount?
So, Chirag, we don't have a similar challenge like some of the larger companies that you are mentioning about. Onward Technologies is very new in the global market, especially post-COVID. We have refreshed the entire strategy as we have communicated earlier. So for us, all our travel costs, especially international travel cost, is always borne by the customer. So if somebody is flying to Germany or Europe or Canada, that's usually borne on actuals by the client. We don't charge the client anything on top of it.
Okay. And about attrition, your comment attrition, like how we managing this issue?
So attrition is, again, not a very big concern area for me. Onward, our attrition for last 12 months was approximately, or was 33%. And I don't see as a concern. That's been the attrition for Onward probably for the last 4, 5, 6 years. And that's true, I'm assuming, for most companies of our size. The attrition that we have is usually at L0, L1 level, right? So it's at a level where people have been working remotely and at home. Attrition at the top end of Onward Technologies, we have not seen that in the last 5 years. And we feel very good about the quality of talent that we are able to attract from the best companies in the world.
Okay, sir. I'll get back to you if I have any further questions. Thank you so much.
Thank you.
Thank you.
The next question is from the line of Sriram Rajan, an individual investor. Please go ahead. Mr. Sriram, I have unmuted your line. Please proceed with your question. Mr. Sriram? In the meanwhile, we'll take the next question, which is from the line of Nishit Shah from Ambika FinCap. Please go ahead.
Hi, Jigar. This is Dhruv here. Congratulations on a good top-line growth once again. I just have 2 questions. One is on the deal wins during the quarter, if you can just elaborate on the same.
Dhruv, hi, good afternoon. Sorry, can you elaborate the question?
I was asking on the deal wins during the quarter, if you can just elaborate on the few key deal wins during the quarter.
Sure. So some of the most exciting deals that we have signed is one of the largest transportation mobility companies in the world is setting up a few thousand digital center in south of India. And for their due diligence, they've selected Onward Technologies to help them ramp up the entire capacity and capability across cloud, analytics, data science. And we have recently started building a very focused team around that. At its peak, I think if once we're able to ramp that up over the next few quarters, and I think sometime middle of next year, they will become one of the fastest growing clients for us. Similarly, we signed a contract last quarter. I shared that briefly on a call. We signed an extension of a contract with another large mobility company where we have to build a large center for them. And the billing for, and again, that's completely for the same skills on the digital side, where we are with the billing for that project actually starts in August, which is next month. Third, we signed a healthcare client in California, where again we are building. It's all completely a digital transformation deal. It was initially only on site, where we are building up the team for them at the client site, and now we've just won our first large offshore project for them, and they will also go into the visibility that I was talking about, 20 potential $1 million clients. So all of these clients, which are a work in progress, where we have signed, it's all about execution and towards that. And the last is we have signed a very large contract for the industrial equipment customer in US, which is one of the largest off-highway industrial products, heavy machinery, mining equipment company, where we are building the entire piece for them on mechanical engineering, which is North America, Canada, and offshore in India. So when I say deal size, Dhruv, these are all contracts which are anywhere from 50 to 250 engineers, and long-term in nature in terms of multi-year contracts.
Right. Oh, great. Congratulations on that. I have another question on your Navi Mumbai digital COE. So how many seats will that be coming for? And can you elaborate on your digital capabilities? How are you building it against some of your peers? Because, all your peers are also getting into digital. So how do you plan to compete with them?
Sure. So, Dhruv, we are on the center that we're setting up in New Bombay is actually for two of our existing clients, which we shared earlier. One is a very large healthcare major, headquartered on the east coast of US, where we have already won the contract 2 quarters ago, and we need to now ramp up the skills in terms of the for data science and cloud. So this is a sort of it's a training academy where we're going to invest in a large number of people who we will train for this client and then deploy them on the various projects. And the second is for automotive clients for exactly very similar skill sets, which is on DevOps and cloud, where we are going to build capabilities towards that. So just want to clarify again, Dhruv. So we don't hire people, train them, and then we look for projects for them, right? Onward Technologies is too young a company to focus on that business model. Our business model is when we win a client contract, then based on the skills and capabilities that we need to build from a pyramid perspective, is where we set up a centers in across various cities in India. So competing against all the larger peers is not something where we thrive proactively, or we spend a lot of capital proactively. What we are very good in and what we enjoy doing is hiring a large number of people at the top end of the spectrum. So a lot of the SME, solution architects, delivery leaders, program managers, then we show the client that we have the ability to attract the best talent, retain the best talent. We put the entire architecture together. Once we win the project, we set up the centers for execution, whether it's the offshore or on-site.
So, Jigar, are you trying to say that in terms of capability, you would be at par with your peers in digital part?
For a company of 300 crore size, yes, absolutely. A company which is 10,000 crores, no, we cannot be at the same size.
Right, understandable. And lastly, on your margins, incrementally X of tab, do you think this is our base and incrementally it should not grow at much faster pace? X of tab, I'm saying.
Sorry, can you elaborate the question on the margin?
In terms of your OPEX and removing the tab cost, incrementally, do you see the cost going up the way it has gone up in this quarter, or do you see this as a base and it should not go up as much as it has gone in this quarter?
So Dhruv, in terms of cost, these are just the start for us. Again, right? For us, it's about, we believe this year we'll spend close to 25 crores in terms of building up the entire investment for these 25 clients. Right? That's one of the reasons, if you remember, why we raised capital last year from private equity firm Convergent. So the objective is now with travel opening up and all our global offices in place. So let me give you an example. Next month, on September 1st, we have our largest office in London, right next to Heathrow, which is opening up. So 2 of our executive vice presidents from India are relocating to London. We are onboarding 7 salespeople or account managers there as we speak. These are techno-commercial, so these are on digital, embedded, and mechanical, and they will play the role of account management. And majority of their time would go into supporting these 25 clients' UK and Europe presence. Right, so this will be a massive investment from our side upfront starting September 1st. And this will be the largest office of Onward outside India from a client relationship perspective. Similar like this, we set up a subsidiary in Netherlands last year. We have a very senior person joining us in a couple of weeks in Amsterdam to lead our entire foray into the Netherlands and the Nordic markets. So he again comes from a tier 1 company. And around him, our goal is to build the entire execution and shared services team, which can service clients, the same clients that we have in the respective Nordic country market. Our Frankfurt office, which was supported from Pune traditionally for the last several years, now we have a front-end team there, which is again focusing on building much bigger relationships. So where we have small mechanical engineering contracts is to transform them into digital services contracts. And the same applies in Cleveland, in Chicago, and Toronto. So I'm just giving you a perspective. So I think it's only a starting point. The opportunity, again, as I say, is so high for us. So it's about just once we build up the base, then that becomes the norm in terms of the flat cost that you're talking about.
Right, Jigar. Congratulations once again and all the best for the future. Thank you so much.
Thank you.
Thank you.
The next question is from the line of Sriram Rajan, an individual investor. Please go ahead.
Can you hear me now? Am I audible?
Yes, you are audible. Please proceed.
Wonderful. Thank you. Jigar and team, wonderful performance on this great growth sequentially and quarter on quarter. I think most of the questions have been answered, just a few of them from my side. So maybe this is to the CFO. See, the EBITDA is about 3 crores for this quarter. And if you layer it with the 2.4 of the expenses that's come in through the TAP program, so it comes to about 5.4 of EBITDA, which is still less than the 6.3 of last quarter when you look at sequentially. Is there something further to the cost despite of a top line increase of 7 crores?
Okay, Mr. Sriram, this is one of the significant costs which we highlighted. Apart from that, there are certain costs which has been increasing. For example, non-direct costs, indirect costs related to the TAP people. Plus, last quarter we opened up the 2 centers, which is a large center in the Chennai, which we acquired 26,000 square feet office, and in Bangalore office, which we expanded from small office to bigger office. The cost of operation in this quarter is the full cost has been loaded, whereas that in immediate previous quarter was only 1 month cost. So therefore, the impact of the balance amount is there.
Fine. That's very clear. Thanks, Dave, for this. And Jigar, just to, of course, we investing ahead and the revenue will follow suit. That's how it works in this industry. But this 3% EBITDA, can we take that as the floor and or there's further expenses and it may even go down? Short term, not the long term. Long term, I'm sure it will be far better.
So I'll try answering your question a bit differently. Again, so for us, we have we are focused on these 25 clients and how to grow the business. What I commit to what we do as an organization is we have very strong financial discipline. So we maintain the operating margin, and then all the surplus is what we are investing back in the business every quarter, right? So instead of hiring 100 salespeople outside India in 1 quarter, we are balancing it out by hiring 5 to 10 a quarter right now and building up the base, Sriram, if I can answer your question. Right? So operating margin is not getting compromised. At some point in time, the first goal is to get towards 100 million in terms of revenue, to build a decent size. Even 300 crores is a very small company or a young company in our space. And even our clients has challenged us that can we show them that we have the ability to ramp up not only offshore in India, where they have their captive centers or non-captive centers, but also in the respective countries where they are headquartered. So Onward today is just putting the foundation for that in terms of investments. And if you remember last year when we discussed, is one of the key reasons why we raised capital as well.
Yes. You mean
because we were seeing the opportunity, we were seeing the requirements flowing our way, and it was more about how do we execute it in the best way possible.
Super. Just few questions associated with the same topic. So the TAP program, so there's a batch that's coming. So we expect to have another TAP subsequently, or maybe towards the end of the year, as somebody was referring to earlier, another 250 coming in subsequently, or this is about it?
So 250 number, just to clarify again, is just a pilot project. And the pilot project, the way we have done it is we have spread them across 5 locations or 5 centers in India on various domains, technologies, and against various client requirements. So we look at it as a pilot project. What we see with these kind of customers that we are serving, the opportunity is as good as infinity, because we're talking about a global perspective in a multi-billion-dollar company, which today is only serviced by MNCs or by Tier 1 companies. So the opportunity is very huge. Our personal vision in Onward Technologies is at some point in time we'll have a 2,000 people academy, which is sort of training and churning out that many talented people who are trained on the latest technologies so we can support the client requirements. So today, for example, Sriram, when a client comes to us for XYZ skills or for a project on a big RFQ comes out, Onward is not able to support them. Right. So if you remember our conversation last quarter, we had an RFP where a customer was looking at adding 5,000 engineers on the embedded electronic side. Right. So if you see the earnings presentation, we're talking just one RFP of 5,000 engineers. And Onward Technologies had to withdraw because if we won the deal, which we were quite optimistic about, we would not have 5,000 engineers to deploy in 1 year. Right. So that's the kind of scale which we're talking about in terms of the opportunity out there in the market. So now we as a company and our management team every day has to decide where we should focus our energies on, where we should invest, where most importantly we can actually deliver as well. Because one bad example of failed delivery and the whole engine stops working.
Exactly. So this 250 resources will quickly get into the top 15 clients anyway. As they start finishing the training, they get ingested. This kind of an auto pipeline just keep going into one of those projects. I think that's the problem we're trying to solve, or creating the capacity for those top 25 customers.
Correct. In addition to the lateral hires that we're already doing, yes.
Correct. That you clarified, all the solution architects and all those. Yeah. So this is to the CFO. My last question, I think I'll keep quiet after this. I haven't seen the financials. I just read through the investor presentation before coming into the call. I'm actually traveling somewhere on business. Even after this 5.17 crores of income tax refund that we've got, is the PAT still that 1.2 crores? If this 5.1 crore had not come, would our PAT have been negative or something like that?
Yeah, this interest income of which is part of the other income which has been done is in the part of the 2.1 crore.
Okay. So this PAT of 1.2 crores includes that, meaning it's net of the 5.17 interest, that's other income that has come in.
Yes.
Okay, fine. Yeah, fine. You clarified that. So which means that okay, fine, got it. Okay, fine. So thanks, team. I think last question. See, there's so much talk about recession everywhere. I didn't see any of the earlier questions coming on that. It looks like we are bullish. We're seeing far more demand, perhaps because the big guys will see the recession. We kind of nimble entering into this space now. But is there any impact, especially the auto industry and all the heavy equipments are facing severe recession from their end customer side? So that's a question I have. Do you see a challenge there?
We are not seeing that as of today as we speak. We are actually seeing demand for our services has gone up in the last 90 days and the entire previous financial year.
Very encouraging. Very, very encouraging. All the best, Jigar and team. I think I have no more questions to ask. Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors LLP. Please go ahead.
Yeah. Hi, Jigar. Two quick questions. You mentioned a couple of times that you have an internal operating margin figure and the rest is getting redeployed. So could you share what that margin is?
Hi, sorry, elaborate the question. You were breaking in between.
I'm sorry.
I would request Mr. Rajesh to speak on the handset. Sir, your audio is not that great. Could you please?
Okay, is it better now?
Yes, please proceed.
Okay. So, Jigar, what I was asking is that a couple of times you said there is an internal operating margin number that you're tracking, and then anything in excess of that, you are reinvesting in the business. So the question is that what is that internal operating margin number? Is it lower double digits, or if you could just share that number with us?
Dave, do you want to take that?
So, Mr. Rajesh, we are tracking the different level of margin indicators. For example, the gross margin level it depends upon the deal, client size, and the territory engagement model on site offshore or the hybrid model on that. Each are the different, but average margin which we are tracking in this is ranging between the 30 to 35% on the gross margin level. However, S&M cost and the G&A cost needs to be loaded over on that to declare the EBITDA and PBT as well.
Okay, that's helpful. And the second question is that our T&M revenue was significantly higher in this quarter. So is that one-off, or do you see more projects of that nature, and what is the associated margin with that? Is it higher or lower than the fixed price?
Sorry, you were breaking up. Did you say T&M?
Yes, T&M revenues were higher. They were, I think, 82% of your total revenue this quarter, which was generally around 74-75% in the previous years.
Correct. So that's, as communicated earlier, T&M is our preferred business model, and we see that number increasing on an annual basis.
Okay. And how's the margin compared to fixed price for that type of business?
So let me simplify again. So we have our T&M business, which is about 82%, and we have our fixed price projects, which is about 18%. Majority of our revenue from our top 25 clients comes from T&M.
Understood.
Significant majority. So as we get more and more maturity in these relationships, even $1 million with a very large industrial equipment company is a very insignificant outsourcing budget from a customer's perspective, right? As you're aware. So for us, it's all about moving up the value chain, putting few years in, building the credibility and the trust, and that's when we get an opportunity to start bidding for large fixed price projects. And those projects have high margin, as you already know, in the outsourcing industry.
Got it. Okay. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Nishit Shah from Ambika Fincap. Please go ahead.
Yeah, hi, this is Dhruv again. Devana, I just want a clarification. What is the interest amount did we get on the income tax refund?
Are you talking about the interest income in the other income which is clubbed together?
Yes. I'll just be on the tax refund I'm talking about.
Yes. If you are referring to the other income, the interest income part of the other income has been belongs to the interest on IT refund and to small amount on the bank deposit.
But can you quantify it?
Yeah, why not? 1.7 PR belongs to the IT interest and well.
Got it. Great. Thank you so much.
Okay.
Thank you. As there are no further questions, I now hand the conference over to Mr. Jigar Mehta, Managing Director of Onward Technologies Limited, for closing comments.
Thank you all for participating in this earnings call. Q1 was an exciting quarter for us, and we are quite positive about the rest of the year. I hope Dave and me were able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our investor relations manager at Valorum Advisors. Thank you. Stay safe and look forward to being in touch. Thank you.
On behalf of Onward Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.